Can crypto make you a millionaire? That's what we're going to be talking about today as we continue the series, Can Crypto Make You a Millionaire? This is part 2 of the series. Hopefully you've seen part 1. If not, I'll be sure to link it above, or I'll put it down in the description as well so that you can make certain that you watch part 1. If you love cryptocurrency and you love the idea of where cryptocurrency can go, then smash that like button, hit that subscribe button, click that bell notification icon, and let's continue. In our previous video, we were looking at the growth potential of crypto. So we were looking at the current size of the cryptocurrency market. We were looking at a couple of individual core projects like Bitcoin, like Ethereum, and some others. And we were looking at if they were to fulfill their goals as a cryptocurrency, is there enough market potential, or with the growth available there, is there enough that you could you could ultimately 10x your investment or more? 20x in some cases. Could you have the potential of investing in crypto and getting to becoming a millionaire and getting to that coveted millionaire status? So again, if you haven't seen part 1, I recommend that you go watch it. Let's continue. Today in part 2, we're going to be talking about your crypto investing strategy. Like, what does it take? Crypto is unique for a lot of reasons, primarily because it is extremely high risk, it is extremely volatile, and so much of crypto is people invest in crypto initially before anything is proven. There's just a white paper, there's just a concept, there's just an idea, there's just a development team that may or may not be known, or they may or may not have a track record. And we'll be discussing that a little bit later in the series as well. But first, we're going to start out looking at what do you need to do to create an investing plan. I will tell you in the next video, we're going to actually talk about, specifically what the plan should be and putting it into practice. And then we're going to continue on in this series. I've decided to do a 4th and maybe a 5th video where I'm actually going to walk you through, if you're brand new, getting started, buying cryptocurrency, setting up your strategy, whatever that may be. And by the way, nothing in this video needs to be considered as financial advice. I am not a financial expert. I love cryptocurrency. I'm a crypto enthusiast. I'm not a financial advisor. I love talking about this space and I love sharing what I've learned. But take everything with a grain of salt. Do your own research. Do your own due diligence. And please don't take investment advice from somebody on YouTube. So first of all, you need to create a plan. You need to have an idea of what you're going to do. You do not want to be ruled by your emotions. You'll hear me talk about creating rules for yourself or guidelines for yourself. You do not want to be ruled by your emotions. And the best thing to do is prepare a plan for yourself. And this plan, inside of this plan, you need to make sure that you're managing risk. Listen, of all forms of investing that I've ever done, I've done Forex, I've done the stock market, I've done options and futures, I've done real estate, I've done small business investing, I've purchased private partnerships and ownerships in small business. I've done those sort of investments. Lots of different types of investments. But of every investment that I have ever made, everything that I've ever done, by the way, that doesn't make me some sort of expert or guru. It just means I have a lot of experience. So I'm sharing this with you from my own personal experience. I just recently did a video showing how I literally lost $16,000 inside of a bull market. If you haven't seen that video, I'll link it above. I'll put it down in the description. You can watch that video. So I'm telling you firsthand that I know that you need to create a plan and you need to manage your risk. You need to understand what your risk tolerance is. Most people cannot tolerate as much risk as they think they can. So I'm going to give you some guidance on this. Manage your emotions. Manage your risk, then manage your emotions. You want to focus on the foundation when it comes to creating your plan. What is your foundation? You want to look at the cryptocurrencies that are most likely to succeed. What is it out there? Now, there's a telltale sign. Look at the market capitalization. Go to Coin Paprika or Coin Market Cap. Look at the top cryptocurrencies. Number 1 is Bitcoin. Look at number 2. Number 2 is far, far smaller than Bitcoin. Now, does that mean that Bitcoin's going to somehow be the number 1 cryptocurrency of the entire world forever and always? Some people think so. And if I had to, put odds on it, I would say it's very possible. However, there's no guarantee of that. And in crypto, just because something's a hero today doesn't mean it couldn't become a zero. Now, I know it's hard to imagine that something like Bitcoin could become the big fat zero, but it is possible. Bitcoin is a very long ways from seeing as a form of currency around the world. Today, people are talking about it being a store of value, and it could become incredibly valuable. One Bitcoin could hit $500,000, $1 million, and potentially much, much more. Like, that possibility is there. But there's also a possibility that something else could rise up above Bitcoin. But you've got to start somewhere. So you obviously want to start with where the market has proven with their dollars that currently today they have the most faith in the future of a cryptocurrency. At this very moment, that's Bitcoin. In number 2 spot, it's Ethereum. Now, if you understand Ethereum, do your own research. In this video, we're not talking about what Ethereum is, and we're not going to go into a lot of detail on what Bitcoin is. But if you believe in the use case of Ethereum over Bitcoin, then maybe you decide to focus on Ethereum. Whatever your foundation is, you need to know this is what I believe. If there's only one or if there's only 2 cryptocurrencies that's going to succeed, this is the one, this is the 2. Listen to me. Here's what you're not looking at. You're not looking at, can this outpace Bitcoin? Can this investment outpace Ethereum? You're not looking for that. That's far more riskier and it's a lot more difficult. Nor do you have to worry about that. Listen, there are very few investments on the planet that have a real shot at doing a 10x over the next 5 to 10 years. But Bitcoin does, Ethereum does have a real potential shot. That's not a guarantee. Don't hear what I'm not saying. I'm not telling you it has a guarantee, but it does have a real shot at potentially doing a 10x. So you don't need to try to look for the 20x or the 30x or the 100x. You don't have to do that. There's plenty of people out there doing that. There's plenty of content out there that's going to get you excited about the possibilities of one project after another. When it comes to creating a plan in cryptocurrency, you have to focus on saving your money. You have to focus on a defensive strategy. You can't focus on a strategy. This isn't a lottery ticket. You're not here constantly just picking numbers for the next winner. You've already done that when you said you thought cryptocurrency could be a worthwhile investment. That is a number in and of itself. So don't go to the, if you're going to go to the bookie to make a bet, go to the bookie that you know is going to pay up. Don't go to the lawn shark down the road that may not pay up, is going to charge you an exorbitant amount of interest and may disappear on you when you win the bet. So don't go to that guy. And that's what some of these super small altcoins or micro cap cryptos are. Market growth potential. We've already talked about that. Less risky projects. Definitely want to be in projects that are less risky because it's your foundation. This is above all else. If I could only invest in one project, what is it going to be? You want to know what that is. You want to focus on that. What is your investing budget? You need a budget to invest. You have to have a budget to invest. You need to know ahead of time. Take this serious. Listen, there are very few times in life when you can say, I'm creating a plan that could literally take me to a millionaire or beyond. That's what you're doing right now. So treat it like that. What is your investing budget? What can you afford to invest? And when I say afford to invest, you need to recognize that there's a real risk of this going to zero. Even something like Bitcoin, even something like Ethereum, there is a possibility. Now, I obviously don't believe in this possibility for my own personal investing style, or I wouldn't dedicate so much time here on YouTube talking about it. But I do know that I'm biased about the future of cryptocurrency. I'm emotionally connected. I'm financially connected to cryptocurrency succeeding. However, logically, I recognize that there is a scenario that I can play out where it can potentially hit zero or near worthless. That includes Bitcoin. That includes Ethereum. That is a possibility. Now, I think it's far more likely that it succeeds and crypto is a part of normal mainstream life at some point in the future. But you have to recognize that there's a real risk of this going to zero. You don't need to invest in crypto if you need to pay bills. If you have a lot of debt, let me tell you what cryptocurrency is not. It is not a get rich quick strategy. It is not a lottery. You know, if you only had $50 to invest, where would you invest it? In groceries for next week. That's not, don't invest in crypto if you don't have disposable income. It needs to be disposable income because it might get disposed of in the cryptocurrency market, even with the safest possible strategy. There is no such thing as safe in crypto. I can't stress that enough. If you invest from a defensive mindset, you're going to be far better off in the long run. Most people take unnecessary risk and they get wrecked over and over and over again. I know people in crypto who in the past few years have literally become extraordinarily wealthy. And in some cases, it happens very, very fast. But I also know people in cryptocurrency who have been investing the same amount of money over and over again. They always put $100 in a project or $50 in a project or $10 in a project. They're always doing this little tiny penny ante stuff that's not going to get them anywhere. And they do the same thing over and over again. They stay stuck in the same cycle. Their crypto bags never really grow substantially at all because they make the same mistakes over and over. When you have a plan and you have a budget and you're focusing on building your foundation and you're investing defensively, that's not going to happen to you. So once you have a budget, and by the way, you can start investing in cryptocurrency for free. We'll talk about that more about that in a moment. And like if you're like, I'm desperate to get into crypto, but crypto wealth, I don't have any disposable income. My family needs every dime we make. If that's you, then it is possible, if you want to, it is possible to earn some crypto for free. We'll get to that a little bit later in the video. We've already said it, crypto is risky. No one has a crystal ball. You cannot predict price movements, but this is the one thing everybody wants to know. I get comments on my channel all the time. I have personal friends of mine who say this all the time. They say things like, so do you think, I just got asked this day before yesterday, so crypto crossed over 50,000. Do you think it's going to pull back? Because I really thought it was going to pull back, but now I'm thinking maybe it's going to go to 70,000. Where do you think it's going to pull back at? I don't freaking know, and neither do you. And neither, if someone else tells you, they know they're lying. They're drawing a bunch of lines on a chart, making a best guess, but it's just a damn guess. None of us have a crystal ball, and if we had a crystal ball, we would have been rich long before crypto. So you can't predict price movements. Recognize that. Don't day trade. Now, this isn't popular because people fall in love with the idea of trading. There's so many trading scammers on Instagram. It is ridiculous. Forex is filled with it. The stock market's filled with it. I mean, it's unbelievable. But I'm going to tell you something right now. Do not day trade. A couple reasons you don't want to day trade, especially in cryptocurrency. First of all, it's highly, highly volatile. If you look at the past, if you go pull up a graph of Bitcoin recently, and you watch how quickly it went from 8, 9, 10,000 to 50,000, there wasn't a lot of chances to trade that. Like it went up so fast. It would have been very difficult to catch most of that move if you were in and out of the market. And by the way, even if you traded it, the odds of you beating the guy who just held on to it, there's no way you could have beat that guy in this current crazy market run up. Crypto is so risky. It moves 10, 20% a day. And now some people who are traders say that that's really good. They like the volatility of it. And I can understand that, and I understand why they say that. But crypto is so volatile that you'll either get left behind or you'll get crushed if you end up in the wrong side of the market. And the goal here is not to ever get crushed. Do everything in your power not to get crushed. Plus, people don't understand the tax implications. We're talking about you getting to the point that you have $1 million net worth in cryptocurrency. That means you're going to be in the top tax bracket. So as you're making trades, you're going to have to overcome, a 40%, and they're talking about raising taxes. It could be as high as a 50% tax. So you've got to earn 50% more than the guys who are just buying it and holding it. So even if your track record is better than theirs, and in almost no case will it be, but even if it is, and by the way, I'm not saying there's zero room for trading in your portfolio. We'll talk about later if you want to dabble with a little bit of your portfolio, if you want to spend 5%, 10% trading. We'll talk about that a little bit later. That's a little bit different. We're talking about the portfolio as a whole, thinking that you're going to somehow double up on your Bitcoin by buying low, selling high. That's always easy to do looking back in the rearview mirror at the past performances. Anybody can draw a chart looking backwards, but nobody can draw a chart that hasn't happened yet. The tax implications are brutal. Every single time that you sell, a lot of people think when you go into crypto, when they're brand new, they're like, if I buy crypto, I'm not going to owe taxes till I sell out of crypto. No, every single time you sell from one crypto to the next, if you sell Bitcoin for Ethereum, Ethereum for Bitcoin, Bitcoin for USDT, USDT for BNB, literally every single time you trade is creating a taxable event. And by the way, don't stress out about that. I've got a video about how to do your crypto taxes in minutes. It's very easy. The issue is not doing your taxes. I'll post that video, by the way, about cryptocurrency taxes above. I'll put it in the description as well. It's not about doing your taxes. That's not the hard part. It's about having to pay taxes on all those buys and sells. because you were capturing profits. And if you're in a 10%, 20%, 30%, eventually 40%, maybe a 50% tax bracket, then you're having to earn 50% more than the guy who's just buying and holding. Now, it's important also that you understand that people who are talking about trading are not telling you the truth. Now, most of these people are not outright scammers. Let me just give you a challenge. I challenge you to find me one trader that has consistently traded and has a positive track record year after year, day trading, or even swing trading the market for an extended period of time, meaning through an entire cycle, bull market cycle, bear market cycle. I hesitate to tell you that there's almost none, and I can say maybe no trader that's ever existed who's traded one market like just cryptocurrency, for example, and they've been successful in a bull market or bear market. Think about that. So you see a lot of advertisements. Why? Because there's a lot of money made in courses. There's a lot of money made in training. There's a lot of eyeballs on YouTube. People want that content. Even me, like trading is one of the most popular things searched on YouTube. Even myself, I have tried to think about how could I talk about trading in a way that aligns with my ethics and that I'm not misleading people, because I don't want to tell somebody something that I don't believe in. But if I can create content about the topic and people find it entertaining enough to watch, they find value in it, I would love to create that content. I haven't found a good way to do that just yet. So I haven't even made that content. But there are people who make the content just because they know people will watch it. There are people who will draw lines on a chart just because they know people want to see that. So just be very careful for that. People out there are not telling you the truth. I mean, Instagram is notorious for guys that are faking stuff. I mean, there's just it literally is not even happening. Day trading is very, very volatile and very challenging, if not impossible, long term. Anybody can make money. I had a guy reach out to me who's worked for a trading group. They were trying to create a crypto trading course. I was somehow recommended to them. They reached out to me. They're selling a course for like $2,500, I think. And this guy who somehow worked with the company or was connected to the company said, listen, I've been using our current trading methods to be able to trade through the month of February. He goes, so I just want to know, before we talk, how was your February? I said, well, this probably isn't going to go very far anyway because I'm not much of a trader. I said, but I'll be glad to tell you how I did in February. How did you do? He said, I did 185%. I said, that's great. I did damn near 500%. And he was like, what? And I didn't do it trading, by the way. He made trades and he created a lot of tax. I mean, that's what he made prior to his tax situation. He's going to owe far more taxes than I'm going to owe. I can promise you. So people just aren't telling you the truth, or at least they're painting a very rosy picture. Just be mindful of that. Use your budget. What is your investing budget? Use that budget to accumulate your foundational position. If it's Bitcoin, then focus on growing your Bitcoin. If you believe Bitcoin's going forward in the future, that's where you decided to hang your hat, or Ethereum, or a combination of both. Maybe you're doing 50-50, whatever. Then your whole goal is not to get caught up in the hype, just accumulate. And you're going to out-earn most of the people who are chasing the hype. I promise you. Dollar cost average. This means, what is your budget? If your budget's $50 a week, then $50 a week. You want to make sure you're making an investment in your foundation crypto bag, your main cryptocurrency bag. Build your foundation. Dollar cost average. It could be $100 a week. It could be $1,000 a week. It could be $50 a week, whatever it is. Build your foundation. But don't marry your foundation. Now, this is important. And some people don't talk about this, but I want you to be aware of this. In the event that another cryptocurrency overtakes Bitcoin, or in this case, there's a lot of people who believe, for example, Polkadot may overtake Ethereum. Okay, you've got to be willing. You cannot marry. Too many people become fanboys of their favorite crypto projects. You cannot marry your project. You need to understand that there may be, if you think Ethereum is like the smart contract project, that a programmable blockchain, and this is the one that's going all the way, you need to know there may come a time when you're going to have to change position. But it doesn't have to be super risky. Here's how you know when to get a divorce from your current crypto project. Wait until the market cap gap closes. Don't worry about chasing great gains because you're like, oh, Polkadot's going to surpass Ethereum. Let me get in now because it's going to go up faster than Ethereum and eventually surpass it. That's a much more risky approach. Remember, you want to be defensive. I would hold on to your Ethereum position until, if Ethereum's number 2, wait until Polkadot gets close to number 3. And maybe wait until it gets close enough to where, it could possibly pass it. And at that point, you could start divesting away from Ethereum. Maybe you put 50% of your Ethereum holdings into Polkadot. and just kind of watch it. And if for some reason Polkadot starts dropping, then maybe you sell out of that Polkadot position, you put it back in Ethereum. If Polkadot ever does pass Ethereum, then all of a sudden what you'll do is you'll diversify away. Maybe you put 50% of it in Polkadot and you just hold it. And if it looks like Ethereum's dropping and Polkadot's going up and that gap is getting wider and wider and wider, then at some point maybe you sell all of your Ethereum and now you're holding your Polkadot. Good common sense defensive advice. At the end of the day, you're going to be riding the crypto tide up. If you believe in the future of cryptocurrency, you're going to be extraordinarily successful if your hope for the future in the general market is correct. And that's what you want to focus on. It doesn't mean that there's not room to play the risky plays, but not with your foundation, not with your main holdings. You got to keep that in mind. And of course, never marry the foundation either. And that's hard. That's actually very hard sometimes. Diversify within your foundation. So you might start out in the beginning. If you only have $10 or $20 or $50 a week to invest, you might just start out, for example, accumulating Bitcoin. In other words, whatever your one cryptocurrency is, you might just focus on accumulating that one. But at some point, if you feel like, I've got a lot of risk, I've got, $1,000, $2,000, $10,000, $20, whatever that number, $20,000, whatever that number is for you. At some point, you might want to say, okay, I might need to pick up some Ethereum at this point. And so therefore you start picking up some Ethereum. There's different projects, but you might want to start diversifying a little bit out of your foundation. Again, we're not talking about taking on excessive risk. We're still talking about holding the largest coins by market cap. I wouldn't rush to diversify, but plan to diversify at some point within your foundation. And today, the way it stands, at some point you would want to own Ethereum and Bitcoin, period, end of story. Create rules early on. Again, this is about managing your risk. Create rules for yourself early on. Rules like, I'm going to invest $100 a week. Then it's, I'm going to invest $100 a week. What day are you investing? Every Monday or every Friday. Create hard and fast rules early on in your career of investing. I'm going to create $100 a week every Monday. I'm going to do it consistently no matter what. What this does is it allows you to create self-discipline in your investing. Fear and greed drives most of us as investors, especially early on. So when you create a rules-based discipline system, it's the self-discipline that's the most important part in the beginning. The self-discipline is more valuable than your investments in the beginning. Practice sticking to them early on, DCA to the moon. In other words, dollar cost average, dollar cost average, dollar cost average. Why is that important? Dollar cost average means if you're making that investment every single week on the same day, at the same time, whatever, for the same amount of money over and over again, what that actually means is that the market is going to go up some days, it's going to go down. Don't think, oh, the market's up today, I'll wait till tomorrow and buy because it might be down. See, now you're starting to play the gamble game. The moment you start trying to time the market because you think it should go down tomorrow, that's when you're going to get hurt. If the market's up, if say you say every Monday I'm going to make a $100 purchase, but on Sunday the market drops a lot, and but Monday it spikes, and you're thinking it should drop tomorrow. No, just Monday. The rule is buy it on Monday. Buy it on Monday, same time, no matter what. Why? Because some days on Monday, the price is going to be abnormally low. Some days it's going to be abnormally high. When you dollar cost average, you're going to pick those average prices, which means as long as the price goes up in the future, you're going to be way ahead of the ball game. Dollar cost average. It takes the emotion out of it. It's a great rule. Stick to it. Expect yourself to become emotional. Plan for it. Don't try to prevent it. Most people, this is where most people mess up. They don't think they're susceptible to the emotions. They don't think they're emotional. Listen, if you don't think you're an emotional investor, I can almost guarantee you that you're an emotional investor. So know that you're going to be emotional. That helps you stick to your plan. That's why you can remember your rules. Again, dollar cost average. Rules like how much you're going to invest. Build your foundation first. What are you investing in? When are you investing? How much are you investing? Focus on your rules. Remember your rules. Know that you're going to be emotional. Be very careful for the FOMO. Something new's coming out. People get excited. People like me get all enthusiastic on YouTube. Too often people are like, well, this project's going to go up more than Bitcoin. Bitcoin can never go up as much as this project. You're right. But that project's also more likely to go to zero than Bitcoin. You always got to look at the flip side of that coin. So be very careful with your emotions. Fear and greed. I always say greedy money's dead money. But you know what? A lot of people never get started out of fear. So watch your emotions. Your foundational plan. Now there's a time when you can, have a little bit of a risky budget, but not with your foundation. When you diversify, use extra funds for that. Meaning, if your dollar cost average plan is $100 a week to invest, or whatever that number is, don't decide, I'm going to start taking half of that and diversify into more higher risk, new projects. I'm going to get into that, new fangled thing that somebody's talking about. I'm going to start staking these really small, obscure coins. I'm going to try to earn these crazy returns. Don't do that with your dollar cost average money. You go create another budget. You go find more room in your budget. Go pay off your credit card, and instead of using that $50 for the credit card payment, start using that $50 to do something risky with it. Use extra funds. Your foundation is always your foundation. Here's another one. Use separate wallets. Keep your main foundation wallet totally separate. I recommend it to be an offline wallet, a hardware wallet, something like a Ledger or Nano. If you don't know what that is, don't worry about it. We'll be talking about it in a future video, but plan to have a separate wallet for that. That wallet, you want it to be a one-way wallet. That means when you dollar cost average, you don't use that. Expect that number to go up. You're just putting $50 in. But listen, when crypto goes from 5,000, 8,000 to 50,000, you end up making a lot of money on your $100 a week, $100 a week, or $50 a week, or $20 a week. It ends up being a lot of money. People get tempted. There's always something they've got to spend money on. Something comes up. Christmas time for the kids. I got to make rent. I got to make this bill. No, if you need that money, then you don't need to be in crypto. You need to create a one-way movement to your wallet. A one-way movement. I know a guy who became a multimillionaire at 37 years of age, and his rule was his investment accounts the money never went in reverse. Meaning he moved money, extra money he had. He lived pretty frugal. He put money over into investment accounts, etc. And to this day, to my knowledge, he's in his 40s now. He's never moved the money the other way, ever. And he's a multimillionaire today. In fact, his investments earn him enough income today that he doesn't have to work at all. And the crazy thing is, he still has this part-time business that covers his expenses. Again, he lives pretty frugal. But at this point, and I just had a conversation with him a month ago, and he just talked about right now he's trying to figure out how he wants to live the rest of his life. He's got plenty of options with that money and how he wants to spend it and how he wants to start pulling out of it. But how did he get there? How did he get to millionaire before 37 years of age? He got there by having a one-way movement. All that money went one way. The moment that you start reversing, let me share with you a story he told me. His family had a budget. His wife came to him. She said, I need to take $20 out of savings for groceries. And it's like Thursday. She went grocery shopping on Saturday or something. And he said, why? He goes, I asked you a couple of weeks ago. He wanted to put some on the grill. He said, I asked you a couple of weeks ago if we had money in the budget for me to pick something up. And you said, yes. What happened? She goes, well, you work so hard and you're a provider. And I didn't want you to go without. So I thought, of course, he works hard. Yeah, go ahead and get it. And he told her, he said, I don't think that we should pull that money out of savings. What do we have in the house? Well, we got some hot dogs and, we got a can of tuna. We got some broccoli in the fridge. We got some onions and he said, let's make it work. And he told me, he said, listen, I had plenty of money. Plenty of money. I mean, he was well on his way to being a millionaire. He goes, but we had never moved that money the other way, ever. And I didn't want to start now. He said, so I did everything that I could to make certain that we didn't break that rule. The moment that you start, you change that one-way wallet, the moment it becomes a two-way wallet, you start breaking that rule over and over and over again. Here's another one. Pay your taxes out of your riskiest investment. Now listen, you're going to start having to pay taxes because you're going to start making money in crypto, at least if the crypto market continues to go up, and you wouldn't be watching this video if you didn't think it was going to continue to go up. So always pay your tax. If you have to sell crypto, sell your risky investments first. And the only time to break your rule on your one-way wallet is for taxes. But make certain before you move that crypto out of that one-way wallet for taxes, and that's the only exception is taxes. Make certain that you don't have any other investment that you can use and liquidate. Always use your highest risk investment to cover your taxes. And hopefully you'll never have to turn that one-way wallet into a two-way wallet till well into the future when you're a millionaire plus in crypto. It is possible to earn crypto for free. So if you want to get started and you're like, I don't have any disposable income, you can earn crypto for free. It's very low risk to get started. You can listen. I have in our cryptocurrency newsletter, our Crypto Passive Profits newsletter. You can go down in the description and subscribe to it. But in that newsletter, it's not for everyone, by the way. But if you want to, feasibly earn $20, $30, $40, $50, in some cases more per month in crypto, absolutely possible. If nothing else, you can definitely start there. Also, if you want to start doing your riskier investments, if you're like, oh, I heard about this project, it might do something. Let me invest in this project. And it's like, 150 on the coin market cap list. It's way down there, 200 and something. Then go make you $10, $20, $30, $40. You use the strategies in the free newsletter and use that crypto. And that way, if you lose it, it's not a big deal. It didn't take money away from your life. And if you're not willing to do what it takes to make an extra $10, $20, $30, $40 in crypto, then it's not worth it. If your only option is to pull away from your foundation, then it's not worth the risky investment. The riskiest investments are just lottery tickets. I mean, literally anything can look good in crypto. Anybody can put up a website. Anybody can put up a white paper, and it can look sharp, and it can sound like it's going somewhere, and then it can go absolutely nowhere. And that happens with big projects, even in the top 20. We've had top 20. We had top 10. I think Substratum hit the top 10, or maybe they hit the top 15 or something. They ended up being basically a scam. That happens in crypto. Now, in the next video, part 3, make certain you subscribe to the YouTube channel if you haven't. Click that subscribe button, hit that bell notification icon, and click all. But the next video, we're going to be talking about the best way to invest outside of your foundation. So when you get ready to start investing outside of your foundation, what's the best way? We're going to be talking about creating a defensive strategy. In other words, I like to say, try to be right even if you're wrong. What's a way that you can invest that even if you're wrong, that you still can end up being a little right? Most important factors to picking long-term investments. We're going to talk about my favorite strategies for picking long-term investments and what are the most important factors for picking long-term investments. If you have any questions, please, by all means, leave them in the comments and let's help spread the word about cryptocurrency. So, of course, smash that like button. Please share this video with somebody else. Remember, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.